Ladies and gentlemen, welcome back to TLT Talks. We have a very exciting guest for you today, someone that's been with us before. For anyone that's out there trying to sell, trying to buy, just keeping their eyes on the market, it is absolute mayhem out there. The rates are out of control. Inventory is at an all-time low. And yeah, it's nuts out there. So today we're gonna have with us Christian Wynn, the preferred mortgage broker, our mortgage partner, to talk a little bit on rates. Right on time, Mr. Wynn. Think maybe there it is. There it is.
Eugene, my brother.
Mr. Wynn. Good morning,
So good
sir.
to
How
see
goes
you.
it? How goes it, sir?
Doing well. Happy Friday.
Yeah, ditto, ditto. Happy Easter, happy Passover, happy whatever else it could be out there, or happy everything to everyone. What is up, my man? How you doing?
Good. Busy. Market's busy. Rates are crazy. New York is great, and we're making the magic happen.
That's it. That's it. Well, why don't you take a second to reintroduce yourself to our audience, let them know who you are, why they should pay attention to you, things of that nature.
Yeah, for sure. Well, thanks for giving me the opportunity again. I'm Christian Wynn from Citizens Bank. I'm a mortgage banker here. I've been in the business for about 10 years now. Prior to this, I was at Morgan Stanley as a financial analyst for the IBD firm, and I've learned my crazy Excel skills from them. So much love to my mortgage crew. It's helped me a lot today to kind of make some good financial decisions for my clients. So that's really nice.
Nice.
And I'm staying busy. I'm the type of banker that looks at everything before I take in a deal. I look at the credit, income, assets, and the collateral. I know that every little thing that you submit to underwriting is very important, and I make sure that's a smooth transaction. You can check me out on Zillow. Love to
Yeah,
see it.
and I can confirm both those things. I can confirm that the mortgage process with Christian is excellent. That's why we work with him. And I can equally confirm that his spreadsheets are excellent, which is also why we work with him. Because for anyone that knows me and Katie and Michael and several other people on the team, we are total dorks. We love our spreadsheets. Christian,
Yeah,
a fun fact for our audience. What do you got for us?
I am a second degree black belt. I don't know if you know.
What?
Yeah,
I did
I
not know.
actually
And
have
what?
on my jujitsu and goju karate.
What?
So if you
You've
look at
kept
my
a concealed
Instagram, I have a
carry this
nice
whole time?
I have a nice like jump kick shot in my Instagram, so you can check me out over there.
Oh, snap. All right. Christian's literally fighting the race. I like it. I like it. As you can see, I've already got one watcher with me all the time.
Yeah,
All the
I think
time.
that's
I
Bob,
actually
right?
took that is Bob, correct. That is Bob. Bob and I, it's not fair because Bob has no hands, so he can't fight back. It's not really fair. But Bob is very good for practice. Actually, I took a really bad spill on Tuesday. I was sparring. Very good lesson for anybody out there that is into any sort of sports. You always have to have a good base. Don't put your legs close together. So if you're stepping forward, it's the left foot and then the right foot. Or backwards, it's the right foot, the back foot, then the front foot. I went the opposite, and at the same exact time caught a low kick, and it wasn't even a low kick,
Mm,
but I just lost my balance. I went up, hyperextended
yeah.
my knee, landed on my hands, thought I tore my
Oh,
triceps. Oh man, just from falling, nothing even. All I did was fall, and I like almost broke my whole body. So, watch
wow.
out there, watch out there. Make sure you're taking care of yourself. But we're not here to
You-
talk about my desired part-time job of Muay Thai. We are here to talk about. That's very cool, dude. I did not know that. That's a very very cool fun fact.
Yeah,
Um,
thank you, man.
yeah, it's very cool. So let's jump in. I would tell you guys like, look, during accounting season, March or April, depending on what you're structured like, it's very good idea to have an excellent relationship with your accountant because they're really busy, they're really overworked, and just that little bit of extra, just that personal relationship makes all the difference in the world. Well, in a climate of increasing rates and increasing refinancing and crazy market, guess who it's really great to have an awesome relationship with? So yeah, man, if you are on the market in any capacity, give Christian a ring, have a conversation. We're gonna try to give you guys as much information as possible today, but I can't like it matters, on the real estate front, on the mortgage front, on the legal front, who you work with matters. On multiple of our deals, we're getting multiple offers with our buyers. when we're going to see property and we're getting ready to make an offer. I mean, sometimes we're seeing things on a Thursday and they're calling for best and final on a Sunday, and it's happening a lot. So who you work with really, really matters. And preparation, all that stuff is key. We'll talk about that at some point during the show. But let's start with rates. Let's start with rates. It's on everybody's mind.
Yeah.
Talk to us about rates. Where are they? What's happening with them? Give us some of your wisdom.
Rates have been crazy, but I do want to piggyback on what you just said first. Being that accounting, the last day to file, I believe, is actually 4/18. So, 2020 was an odd year for a lot of people, especially the self-employed borrowers, right? And, underwriters, because we don't know how COVID had negatively impacted them, we want to see how they're going to be affected for the future, right? So people who are negatively impacted in 2020 now have the opportunity to make that income up in 2021, right? So underwriters take the average of the 2 years. So if you're a self-employed borrower and you take big deductions and you're trying to get a home, you probably may not want to take it as big as a deduction because you want to claim less in expenses and claim more in income, right? And when you do that, you can be able to qualify more. So that being said,
I have no idea what you're talking about, Christian.
Yeah, I'm here to guide you guys. I got you. Long story short, if you want to qualify for a mortgage, it's really important to take a look at the numbers, talk with your CPA, talk with me, and we'll make that magic happen.
Yeah,
okay.
Let me speak from personal experience. So, myself, I'm happy to pay my fair share of taxes, but I want to be tax efficient. Wherever I can take deductions, I want to take deductions. And then what nobody tells you is, well, when it's time to take on debt, whether it's a home, a car, whatever, when it's time to take on debt, well, that could end up, that limits your buying power, And so obviously I did know that. And so we were looking at a property or whatnot. And Christian and I ran into a heap of issues because of the, my taxes are really efficient, but then it limits my buying power. So yeah, for sure. If you think you're 3 months, 6 months, a year, whatever, out from buying a home, if you think you're going to buy a home in the next 2 years, look, guys, the whole game is preparation. Plan your work your plan. The whole game with anything in life is preparation. So at the point that you have an idea, maybe I'll buy in X, that's a good time to get on the phone with people and just set yourself up for success. So you don't find yourself, scrambling later on. It's a really good point, Christian. Thank you. It's a great point.
Yeah, of course. My pleasure. Okay. So let's talk about interest rates. Obviously, since the start of the year, rates have been rising quite rapidly, actually, to a point where we're actually at pre-pandemic levels. So 2019, we were in the 4 or 5% range, and that's kind of where we are today. And during the pandemic, the way to kind of help the consumers and the people, the U.S. citizens, the rates were very low. You don't even have to pay back student loans yet. You don't have to pay back the PPP loans, some of them. And right now we're finally at the endemic, and now because of that, the economy is coming back together, and rates are coming up to combat inflation. So look, at the end of the day, we still here at Citizens have a lot of mortgage products to help our clients, right? We have our traditional 30-year fixed. We have our 10-year adjustable rate, 7-year adjustable rate. We also have our interest-only options. And look, even though rates are going up, clients live in the payment, right? So even though if they don't take the 30-year fix, and because it's a higher rate, but maybe they'll consider the 10-year arm because they're going to see that lower interest rate is going to help with their bottom line at the end, right? So, it's just important to, when I talk with clients or when we talk to clients, we just give them their options. We educate them. We tell them what we can, what we're seeing in the market, and, we just help them make an informed decision.
Yeah, that's right. Spot on, man. And look, and it's also perspective, right? So for anyone that bought a home in I think it was in the late 80s, right? Like, what were they, 18, 20% interest
15,
rates, right?
yeah,
So,
they're in the teens.
Yeah, so the idea that they are now 4% and not 3%, look, it sucks because it went up from what it was, but ultimately in the grand scheme of things in the history of the market, so you're borrowing money at 5%. Inflation currently is being quoted at about 7%. So even if you're getting a loan at 4% or even 5%, it's still less than inflation. So
Yep.
Look, you can't hold on to the past. It is what it is. Again, from personal experience, we made an offer on a property back in November or so, and Christian and I had quoted at that point a 10-year interest only was like 2.625, and then we made an offer about 30 days ago on something, and that same exact product was 3.9%. But in the grand scheme of things, the difference between the two per month was about $1,000. Now, I'm not saying that's nothing. But, we were looking at a $2 million home. if you're buying a $2 million home, $1,000 per month, it's not gonna be enough to like not buy. So in the end, people will complain, they'll whine about the past, and then they'll just move forward anyways. Part of what's still driving this market is, even though rates are going up, the inventory is at record lows. There's nothing to buy, and so even though the payment's $1,000 higher, like, it is what it is, and it's only going to get even higher, right? So we'll jump into that. We'll jump into that a little bit too. But I do want to share one thing. So I just started a campaign on my social media. I went to an event. Actually, I posted this yesterday. I went to an event a few weeks ago in Florida with Tony Robbins, and he interviewed some of the who's who of the financial world: Ray Dalio, Paul Tudor Jones. Gary Vee was there on Web 3.0. There was a bunch of VCs on technology. Larry Summers was there, and so we're gonna do one show a week. I'm just gonna do one video a week, just sharing kind of what I learned in chunks. And a sneak peek, Larry Summers talked about rates, and I'll go into this in the post next time. But interest rates are not done climbing. Inflation is not done climbing. This is the foreseeable future for a while. So if you're someone that's on the bench and you're waiting for real estate prices to come down, or you're waiting for the rate to come down, man, you're going to be waiting for a long time. You're going to price yourself out. It's like, besides the fact of the normal, it's only a fool that tries to time the market. Like now, every single indicator, every chart, every graph, every indicator points to inflation rates are going to go up, and all of these folks, they're unanimously agreed that with the inventory levels at what they are, and without there being a whole ton of viable alternate investments, that real estate values will hold their value or even appreciate. And so knowing that, that's what it is. So Christian, let's really quickly, because you mentioned that you rattled them off kind of quick, the 30-year ARM, the IO, the interest only, and the ARM. Some of our viewers, we've done this before, but it's been several months, and some of our viewers might know about it, but some may not. So if you could just very quickly, very high level, what's a 30-year fixed, what's an ARM, what's an IO, this is what they're about, just sort of very high level, very quick.
Yeah, for sure. So the 30-year fix is probably the very most traditional product, way back when, right? And it's essentially your interest rate is fixed for the full life of the loan. So 360 months, you're going to be making that steady payment, and that interest rate is going to be fixed. The 10-year ARMs and adjustable rate mortgage, where the first 10 years, that interest rate is fixed, and then on year 11 through to year 30, that interest rate will adjust. Similarly with the 7-year ARM, right? The number in the front is indicative of how long the rate is going to be locked for. That was a tongue twister. And then we also have our interest-only program, right? Which essentially you're only responsible for the interest-only payment. And a lot of my finance clients love this, right? Because in the end, like throughout the year, they like to have their monthly cash flow, outgoing cash flow in terms of their housing payment as low as possible, right? But then when they get their big bonuses at the end, they love to dump it into the mortgage. And now when you pay the principal balance, the interest-only portion gets recalculated to a lower interest, right? Because you only pay interest on the principal balance. So right. A lot of the times, it's a very interesting product for clients who want to keep their outgoing cash flow low and make those big payments.
Yeah, very spot on. It just creates access, right? So let me break this down to numbers. So the first, we were Julie and I were buying my wife and I were buying a 2-bedroom apartment at the Edge. This is forever ago now. I think, gosh, six years. I don't even. Many years ago. I can't even believe it. And we were living in a loft, and the loft was worth just over $1 million. And we were looking at an apartment that was $1.85 million, a 2-bedroom. So expand. It was right before, it's 2015, because we were just about to have our kids, right? And so the price of the apartment was $1.85. And so we went to Citizens and we said, what can we do here? And the 30-year fix at that time with those rates, the 30-year fixed payment was $8,800 a month. We were in a rental paying about $5,000. And so the 30-year fix was about $8,800. And so that was completely out of the question. It was too big a jump for us, almost double. Too big a jump for us, so we were going to do it. Then the ARM, a 7-year ARM, was $6,600. I'm like, all right, it's about 15% more. It's about $1,000 more. We could swing it, and now we're going to own. Plus, it's a really nice, apartment, whatever. And then the interest only was $4,400 a month. So the reason for this is between the 30-year fixed and between the ARM is usually about 1%. 3/4 to 1% is usually the difference. So because of that, just on the rate alone, you're saving, 15, 20% of your payment. And look, the most important question I ask every single buyer before I connect them to Christian is, how long do you think you're going to own the property? Because no one owns property for 30 years anymore. And even if you do, why would you overpay in this? I mean, the truth is, people have been worried about rates going up for a long time, and for nearly 15 years, they didn't move. Now they are moving. But still, if you know you're not going to own a home for 30 years, why would you subject yourself to a payment of 20, 25% higher? So then you've got the interest only, which is my favorite product. It's how I buy every home. It's how we advise most of our clients. It's the equivalent of, you have a credit card, you've put some money on the credit card, and now when the payment comes, you don't pay down any of the balance, you just pay the interest. So your monthly payment's really low. Now, you probably wouldn't want to do that with a credit card because you can't sell a credit card for appreciation. But if you look at a 100-year chart of real estate, it always goes up. There are blips where it does either stall or go down. But those look at our last indicate. Look at the indicators for the last 20 years. 2008 was about 18 months, right? 2016, it was about a year. 2020, it was less than a year. And then it rebounded hardcore. So unless you're a flipper, a developer, you got to sell it within a period of time because you got hard money or you got mezzanine loans or whatever. If you're a buyer and you plan to buy a home, there's virtually, statistically, not my opinion, statistically over a 100-year chart, there's virtually no chance that when you go to sell the property in 5 years, 6 years, 7 years, that it has not appreciated. And here's what's really cool. Again, for the people that are into finance and numbers and sheets, if you buy a property for $1 million and you put down 10%, excuse me, let's go the other way first. If you buy a property for $1 million, and some people like to put down a big down payment to bring their mortgage payment down or just for safety or whatever. If you buy $1 million property and you put down 50%, you put down 500 grand, right? And the property appreciates by $100,000. Let's eliminate closing costs in or out from this calculation for the sake of ease. So you put $500,000 down, it's $1 million property, it appreciated $100,000. The question I always ask is, what is your ROI? What is your rate of return? And so ultimately your rate of return is 100,000 on 500,000 or about 20%, right? Now, for this interest only product and this 90% financing that Christian can offer, let's say you did 90% financing for that same $1 million property. You put down $100,000, not $500,000. Now the appreciation is unchanged. The market is the market. So now let's say it's gone up 100 grand. You've put in 100,000 to make 100,000. Your rate of return is 100%. So part of what's great about Citizens and Work with Christian is you can own real estate, you can leverage a lot of it, borrow money at 5%, which is lower than the cost of inflation. And when you are looking to sell at some point, your returns look phenomenal. So look, at a high level, 30-year fixed, again, in my opinion, if you think you're going to be white picket fence for the next 20 years, maybe. But even then, I don't know. Even there, I might do 10 or 15, and there are options across the board. Then you've got your ARM and your interest only, and those are really exciting. And then you got 90% financing, which Citizens offer without any extra insurance. Christian, did I do a good job covering that? I feel like did I get to everything? Is there anything I missed? You want to chime in?
Yeah, I mean, you did great. I think there's a lot of things that you said that has a lot of validity, right? And in terms of why pay the 30-year fixed versus 7-year ARM, which statistically, if people are selling less than them, then, that extra difference that you save between the payment could be like $300, $500, depending on how big the loan amount is, right?
Yeah.
And with that extra money, you can allocate those funds to something else, maybe like life insurance, right? Because, as you buy a bigger property, you want to make sure that, God forbid, if anything should happen, you have something to cover that big expense, right? And so it's just kind of a way to allocate money. And, someone told me money loves to create money, right? And the more that it moves around, the more it moves around, the more it just generates itself, right? Money doesn't like to stay stagnant. So if you just put it all into the home, then what else are you doing with the other assets, right? You want to kind of generate multiple avenues of wealth, and that's just one way of optimizing it.
Yeah, spot on, man. Ray Dalio is considered to be by many the most successful, financial wealth manager of all time, and his whole thing, it's not a secret. It's in his books. He talks about it all the time. His whole key to success is asset allocation, especially if it's uncorrelated, that you want to have 8 to 12 uncorrelated bets, right? And so, that could be crypto, stock market, Web 3.0, real estate, could be a business you invest in, it could be NFTs, right? Like, but essentially, right, it's spot on, man. Like, from the purpose of financial investing. And most wealth is created through asset allocation, through being multiple things at the same time. If you were investing in crypto in 2020, holy moly, did you do well. If you were investing in the stock market in 2020, holy moly, did you do well. If you bought real estate in 2020, holy moly, did you do well. And if you did all three of those, holy moly, did you do really well.
It's very true.
Holy moly.
All of it's true.
So yeah, man. So look, if you're in a position where you're interested in making a move on any sort of real estate acquisition, don't listen to the oh, you got to do 30-year fix because it's safe. It's like using a typewriter or getting to work on a horse. I'm not saying that it's not the answer, but it's not the only option, and not necessarily the go-to. The first thing is, how long do you think you're going to own the home? What's going to be the use case? Yada yada. For those of you folks that love to pay down your mortgage, you might go down a 15-year product where you pay the loan down in 15 years, because actually most people don't know about this. Check this out, folks. If you go down the road of a 30-year fixed, and let's say you borrow $1 million, do you know how much you're paying back over 30 years? Do you know what all that interest amounts to? I'm going to pause for like 3 seconds. Just think about it. Take your best guess. I've borrowed $1 million. How much am I paying back over 30 years? Is it a couple $100,000? What do you think it is? The answer is $1 million. About. If you borrow $1 million over 30 years, you're paying off $1 million, double. So you're just making 30-year fix is designed to make the bank a lot of money, and they've done very well with it. They've expanded and grown and yada yada. Make yourself money. Don't make the bank money. Make yourself money, man. Save the money, reinvest it, yada yada. It's a lot of home. All right, let's move on, because you and I could go all day long. We're both so passionate, Christian and I, about saving people money and moving people forward that we could stay on this one topic all day long.
Yeah, I mean, like we're talking about mortgages, right? And I'm hearing horror stories of like rents right now being increased 10%, 20%, 30%, right?
50, yeah, crazy.
40%. I mean, like for that, people who are renting, you're not in control of your destiny, right? You're letting someone else control your destiny, and that kind of gets a little scary, right? You never know what that's going to be for you. And like some people are living on a specified budget. They're salaried employee. Sometimes their raises are only adjusting to inflation, like 3% raise sometimes. They're not getting these big raises, big bonuses, right? So those who are just renting, it kind of puts things into perspective, right? Like you're going to be priced out of rent at some point versus, if you actually own your own home, now you have something, you're building equity, you know what your mortgage payment's going to be. And at the end of it, you have money. If you have a $5,000 rent and you stayed there for 10 years, you're giving out $600,000 of your own money that you will never see again.
Post-tax dollars.
Post-tax.
Ever. Dollars. Right?
So now, if you owned your own home after 10 years and you want to sell it and you're going to have that money, that's going to feel pretty nice. So a 1% increase in rate, I'd rather have that than a 30% increase in my rent. So let's go.
And to your point, let's go. I love it. To your point, if somebody, just for anyone out there that owns a home or that thought about buying and didn't, just think about it. The home that you have in your mind, the condo, the club that you have in your mind, what was it worth 10 years ago? Just think about that.
Mm-hmm.
Just think about what it was worth. Yeah, I remember moving into the Edge, which is, for those that may not know, is we do a lot of work. It's a condo in Williamsburg. My first apartment, I bought at $600 a foot. $600 a foot. And then by the time things got to $1,000 a foot, I constantly heard, oh, well, that's it. We've missed it. And you know what? We have multiple things going to contract for $2,000 a foot. So imagine the folks. And on the flip side, the rents are up like 40%. So imagine all those folks that could have bought in Williamsburg, what is it, 2022, 2012, that have spent $500,000-$600,000 in rent, that could have made $2-3 million in equity. Right?
Yeah.
Anyway,
agree.
So final point, we got about 5 minutes left. You, sir, are truly an expert at your craft, and I'm always really appreciative for everything you do, not just for myself and my family, but for our clients. Any tips? It's the Wild West out there. For anyone that's actively buying with us or not, what do you recommend? Any tips, any expert recommendations?
It is a crazy market. And what I would say is when you're going to make an offer on a property, you want to be very well prepared, right? You want to come with a pre-approval in hand. The market's so hot right now, you can see in the morning, and like you said, it'll be gone by the afternoon, right? So if
Yeah.
you really want this property and you really want to make an offer, be smart about it. Get your pre-approval, get your income, your assets, your credit, get that all checked out. So that way when you go out and you show your clients and they want to make an offer, you say, boom, I'm ready to go. Let's make this happen. Sometimes getting a pre-approval, it takes time, especially if you're
Yeah.
self-employed. You got to get your tax returns, you got to get your CPA involved, you have to get your year-to-date profit and loss statement, your balance sheet, and it's just like, it may take you a few days to get that together. And if you want to make that offer, you don't want to just lose the property because you were unprepared, right? So
Yeah.
it's just a matter of dotting the I's, crossing the T's, getting the work done, and it'll save you a lot of things later on.
Yeah, for sure. And I cannot stress that properties are going to, guys, once upon a time, 10, 12, 15 years ago, when you thought about looking for real estate, you open the New York Times, like, right, it wasn't like it was there, but today everything's search-based. So property hits the market, there are more buyers than there are properties. All the buyers flood there. And that's it, you got to go. And if you only start your pre-approval process, then you got no chance, you're dead. And from personal experience, you don't know what of your income will be qualified. You don't know what's on your credit report. Maybe there's something in your credit you didn't know, right? You don't know how the bank's gonna look at your income, what period of time it needs to be. Like, it's physics. Honestly, getting a mortgage today is the equivalent of physics. There's all these formulas and there's all these interpretations. And quite frankly, what good reason is there to wait? Why wouldn't you just be buttoned up so that you can pull the trigger and be educated? I can't tell you how many times we start working with a buyer and we have a really thorough intake process, and they give us a budget and a location and that whole thing. And we ask, have you gotten pre-approved yet? And they'll say no. And we'll say, like, look, it's part of our process. It is absolutely a disservice to you as a buyer to do anything between getting pre-approved and going, before getting pre-approved, essentially. And I would tell you guys, 30% of the time, about 1/3 of the time, when they go and get pre-approved, something shifts. Either their buying power increases because they go away from this quicksand of the 30-year fixed, or they realize, oh man, I can't buy. I need to rebuild my credit. My income doesn't and they just, can you imagine what it's like to look for 3 months, get into a bidding war, win that bidding war, and then find out you can't buy it? Just we've been there, we've been there. It's an awful feeling. Last question, Christian. Rate locks, right? So this is a big talking point. Cooler talk right now is rate locks. What's free, what's not? Can you just give us, high level, 2 minutes, 1 minute on what's available? How does it work? Are there fees? Talk to us about rate locks.
Yeah, for sure. So at Citizens, our standard rate lock is 90 days. And typically we only lock when there's a fully executed contract of sale because, sometimes co-op boards are taking forever, right? And you want to make sure that, if you lock in before the executed contract of sale, you may end up costing yourself rate extension fees, right? And that can get really costly depending on how high the loan amount is. So it's really important that, when you look at the contract of sale, we have to look about how far is the closing date, what's the contingency date, and we have to make sure we actively manage to that, right? And if you're buying in a new construction, we do have our long-term rate lock options, and there are different tiers to that in terms of 120 days all the way to 360 days, right? And it's just really important to really manage to certain deadlines, and we have a slew of products, and we're happy to go over for each specific line.
Awesome. So if someone gets just very generally, if someone gets a 3-month rate lock and then they have to extend, what do those fees generally look like? Like an extra 3 months extension is generally what?
So it's a cost of a quarter point for every 30 days. So a quarter point on $1 million, you're talking about $2,500 that you're paying.
Right. Cool. So yeah, that can get really costly. And the last piece is, again, if you're working with somebody like Christian, he knows what the underwriters are looking for. So ultimately, he's going to tell you, this is what I want. It's kind of like us when we do a lot of rentals. We did about 700 rentals last year. Before we present anything to one of our landlords, we underwrite all the paperwork, right? Like, there's the employment letter, have everything it's supposed to have. Is the bank statement up to date? Because we know what the landlord's going to ask for. Similarly with Christian, prior to giving anything to the underwriters, he knows what they ask for, and he's like Sherlock Holmes with a fine-tooth comb, making sure. So, in conclusion, the rates are crazy. Real estate's going to continue to go up. So get off the bench, and if you're thinking about it, get in the game and stop waiting. There's multiple products out there, but do your best to steer clear of that 30-year quicksand waste of money and talk to myself or Christian or whoever your person is. And be ready. If you stay ready, you don't gotta get ready. Be pre-approved. Get your stuff ready. Rate locks are about 90 days. In conclusion, any final tips, my man? Anything to add before we sign off?
I just want to say, don't be that shoulda, woulda, coulda person, right? Get it in now, control your destiny, and let's make it happen.
There you go. There you go. Man, I was gonna say prior to you saying double black, but I was gonna say, Christian, one of these days, let's do dinner and sparring. No more, my man. I'm not coming anywhere close to you. Guys,
It's been a while, but I got that muscle memory. You know what I mean? And I worked that feedback. You know,
I can send you Bob.
Still
I can send Bob your way, man. But I don't want no part of the scene.
Bob was looking at me funny the whole time we were talking, so I don't know. We'll see.
Christian, thank you for your time, my friend, and for everything you do for us. Really, really appreciate you, man.
Of course, man. Love you guys. All right. Happy holidays, everyone.
Yeah, see you, everyone. Take care. Thanks for tuning in.